Hello everyone. Welcome to today's webinar brought to you by Vantage. How's everyone going? How's your trading going? Yeah, I'm good. I'm good. Okay, once again, hey everyone, welcome to today's webinar brought to you by Vantage. Our topic for today is going to be Tariff Tango, which is what's the latest on Trump's trade war. You do kind of need to know this if you are an investor, if you are someone who trades the US dollar, if just basically anything to do with the US, you do need to know, even if it's not US related, you do need to know that the tariff does affect the whole world, like in a whole, as a whole. So why does it matter? Okay, so because you know how Trump launched this tariff thing in April 2025, right? It had a major crash. Well, not really a major crash, but a major impact onto the market. And we just want to know from now on, where does it go? So when he launched it, he did like Canada. As of now, he did Canada a really high percentage, Brazil 50%, India a really high percentage, and then some really lucky countries got like 10%. I think Singapore is one of them who got 10%. I am from Singapore. So yeah, we are one of those who got 10%. I'm not sure where you guys are from. Do let me know in the chat box where you guys are from. I do want to know where you guys are from so that I know like how bad it affects you guys. Okay, another thing is, before I continue with this webinar, I do need you guys to read through the disclaimer. I'm going to stay here for a minute. Okay, the disclaimer is basically just a reminder that you should not be taking this webinar as any form of investment advice, any form of financial or that kind of advice. This is not a signals group. Okay, this is purely for educational purposes only. Okay, nothing that is said in this webinar should be construed as investment or trading advice. So please just do your own due diligence. I mean, it doesn't have to be trading, it's just anything at all. You shouldn't be just jumping on information without doing your own research anyways. Okay, so another risk warning is that trading Forex and CFDs, especially if you are trading on margin, carries significant risk and is not suitable for all investors. Okay, you can lose substantial amounts of your investment. You might even lose everything. So please only put in what you can afford to lose. Okay, do not go and like borrow money to be trading or investing, because that is dangerous. If you are wrong, you're going to be wrong hard. Okay, cool. Okay, I'm going to introduce myself. My name is Cassandra. You guys can call me Cass. I am an investment analyst and a prop trader. So I'm an investment analyst at Everest Fortune Group, we're the finalists for the best Forex and best equity research for multiple years running. We do a lot of back testing, a lot of forecasting, a lot of like basically just research on where we think the markets are going, on technical analysis, on economic data, anything to do with investing, anything to do with trading. Our team research on it extensively. And our team also comprised of a team of prop traders. Okay, for those who don't know what prop trading is, it means that we are funded. Okay, we're funded by we're funded, and what that gives us is funds that we can trade for companies. Okay, so to get funded, it's not that easy. We need to do 10% profit within the month. Well, back then that was what the requirement for me, but like nowadays it has been very lenient, okay, to get funded. And once you get that 10%, they will fund you. So it's not that easy to get funded and to be a prop trader, but if you are, it just shows a certain level of ability in trading. So the whole reason of me sharing that with you is so that you guys know that whatever I share with you guys is things that I've done research on. Okay, and you guys are in good hands. Okay, I'm not gonna share like random information I found on Facebook. Okay. All right, cool. So our agenda for today is, what are the latest developments in Trump's tariffs? Which sectors are winning and losing in the tariff environment? what are the traditional safe havens? Why are the traditional safe havens like US dollars and treasuries falling while gold continues soaring? And trading opportunities. So short tariff exposed retailers, long domestic. Does it expose long domestic manufacturers? And then the last thing is Japanese yen and the Swiss franc, the new safe haven currency. We're gonna look into that in a while. And then we'll find out. Okay, can you guys give me a moment? Those who are on Zoom, can you just say hi? Like anyone at all, can you just say hi in the chat box so that I know that the chat on Zoom is working? Anyone at all? Okay, hi, thank you, Rob. Thank you, Benedict. Thank you, Ryan. Thank you, Joash. Okay, the chat box on Zoom is definitely working. The chat on Vantage's app, it was working a while ago and it stopped moving. So I don't know if it's because people have stopped talking or the chat is not working. Let me re-log in. It's very important that I can communicate with you guys, because if you guys have questions and I cannot communicate you guys, I would not be able to see the questions and I would not be able to answer you. Yeah, I mean, I see all the last chats. Okay, I think it should be working. Anyways, if it's not working, if I'm not answering you, just know that it's because there's a chance I don't see your message. Okay, yeah, let's move on. Okay, what are the latest developments in Trump's tariffs? Okay, cool. So the executive order that was set to launch the reciprocal tariff system was done on the 2nd of April. We are now in August. It's been 4 months since. So when he just decided to launch the tariffs, it was like crazy. The market was moving like crazy. I think I was reading the news and like people are losing their jobs, right? And like small businesses are suffering, especially in the US, because the tariff basically means that, let's say I'm in the US, okay? Let's say I'm in the US and I import a toy car, okay? For example, I import a toy car into the US. The cost of the toy car would have been $10 without the tariffs. But because, yeah, I'm importing it from China, by the way. But because, okay, yes, I can see your chat. Thank you so much. Thank you. It should be working now though. It should be working for everyone because I see the chat moving right now. Okay, so let's say you are in the US and you're running a small business and you import a toy car from China, for example. Uh, for example, China's tariff is 50%. This is just an example, that's not the actual number, 50%. So if the cost of the car is $10, it actually costs now $15 because we're talking about the $10 cost price, adding another 50%, which is $5. It is now $15 to bring that same toy car into the US versus like a year ago before Trump has made this executive order. Okay, that being said, what does that happens is now because things are becoming more expensive, there's two things that are gonna happen. The first thing is the business owners can decide to not earn so much. Okay, they can decide to just earn lesser. So let's say they bring the toy car at now $15 and then they sell it for 20. So they're only gonna earn $5 now compared to before when they were earning $10. Okay, so the first one is to do, oh, sorry guys, give me a moment. Okay, I think we should be good actually. I think we should be good. Sorry, my computer just signaled me to turn on my charger. I think my charger came off, but I see that we're at 30%. I think I should be able to finish the webinar with 30% batteries. Okay. So the first thing is the business owners can choose to earn lesser. If they earn lesser, that means that you know, they have to sell more to make the same profits they did back then. Or the other option is they are going to pass that cost to the consumers. So instead of selling it at $20, they are now going to choose to sell it at $25 because they need to cover that extra cost that now they have to incur. Okay, that extra cost that they now need to incur. Oh, by the way, guys, last week when I was doing this webinar for you guys, I think I was talking like I talked halfway and then I just stopped talking for those who are on Zoom. But for the one on Vantage, it's because these webinars exactly at 1 hour, it will cut off. So I didn't know that because last week was the first time I was doing these webinars for you guys. I didn't know that it will cut off exactly at 1 hour. So I'm going to try my best to finish everything within that 1 hour so that you guys don't get shocked. Okay, so let's continue. So the tariff is basically a base 10% rate plus country-specific surcharges across about 60 nations. It justified under a declared national emergency, citing trade deficits as threats to national security. I mean, that's what Trump said. Okay, so it escalated. Trump, now it's August 2025 escalation. Basically the update is that Trump issued a new tariff rates ranging from 10% to 41% on imports from 69 trading partners. Okay, 69, it's not the entire world, it's basically 69 trading partners that they usually trade with. So this can include people like Canada. Canada has been hit with a 35% tariff. Brazil has been hit with a 50% tariff. India, a 25%. Taiwan, a 20%. Switzerland, a 39%. So he's very, like, there are reasons why he gives certain countries more or less. Okay, so importantly, US Trade Advisor confirmed on August 3rd of August, that the tariff rates are essentially fixed with minimal room for exemptions or diplomatic negotiation. So if that country has been given 50%, you are stuck with that 50% for now, or at least until Trump's presidency is over. Okay. So we don't know when there's going to be wiggle room. Maybe a new president will change it. But as of now, they have decided that the trade advisor has publicly said that the tariffs will not be changing anytime soon. Okay, so the legal challenges and court actions that have been happening is that a US trade court ruled in VOS Elections in United States that Trump's tariffs exceeded execution authority under the International Emergency Economic Powers Act and violated constitutional limits. The tariffs were enjoined and declared illegal. Okay, but yeah, this is what's happening in the US. Regardless, the tariffs is still intact. Okay, so the government appealed and the Federal Circuit temporarily stayed in injunction. A full hearing is scheduled for 31st of July, which happened last week, keeping tariffs in effect for now. Okay, so as of now, tariffs are still a go, even though there's a bit of hoo-ha going in the US. Okay, so meanwhile, Congress proposed the Trade Review Act to restrict future tariffs authority, though the White House threatens a veto, and the legal and political showdown is escalating. So the tariffs is not only affecting the whole world, it's also just affecting politics in the US itself. Okay, geopolitically, US, Canada, Mexico is having a trade war reboot right now. So as of March 4th, the US imposed 25 tariffs on all goods from Canada and Mexico, 10% on Canadian energy. Okay, so triggering reciprocal measures from Canada. Certain USMCA compliant auto imports were temporarily exempted, but other than that, majority is being tariffed. Okay, the tariff applies to majority of it. So the Indian targeted a tariff of 25% on Indian exports starting from August 7, which is in 2 days, due to India's continued Russian oil imports. Trump specifically called India a dead economy and charged it with profiting from wartime trade. Sorry, I think I'm being told that. Okay, I think I'm being told that the chat's not working. Okay, so China escalation. So after US hikes, China retaliated with a 34% tariff on US goods and restriction on rare earth exports, prompting threats from Trump of a further 50% tariff if China did not back down by early April. But I mean, they did not. So EU in negotiations is still underway. The EU officials expect possible exemptions for autos and industrial goods, aiming to ease a 15% blanket US levy. Discussions are still ongoing though, so there's nothing that is concrete. Okay, market reactions and economic risks. Equity market reaction just ahead of new tariffs, US equities tumble. The Dow is down by 1%. I mean, that's just off last week. Okay, S&P down, Nasdaq is down 2.2% and S&P is down 1.6% amid weak July jobs data and tariff fears. So the bond market's treasury yields dropped sharply. 2-year yield down 25 BPS, and pricing is expected Fed rate cuts and reflecting heightened risk aversion. So safe havens surged. Gold in India spiked by 1.6% on August the 4th, which is yesterday, boosting gains as markets digest tariff risk on India. So basically, what's happening is that tariff slice and expanding is affecting a lot of things, especially in countries that really do rely on the US. So these countries are like India, Brazil, China. I mean, they say they're not very reliant on the US, but I think it does affect them as well. Mexico and the EU, okay? The legal authority, again, there's just pending major court cases that are pending, and market volatility it's still volatile right now. The market is still deciding. Okay. Which sectors are winning and losing in the tariff environment? The ones that are winning, we'll look at the ones that are winning first. Okay, guys, I'm so sorry. The slides are a bit blur. I actually had another set of slides just now, but right before this webinar started, I couldn't open my slides, so I just decided to use this ones instead. But it's okay, the information will still be the same. The pictures will be a little bit blur and they weren't downloading very well, but it's okay. The information will still be the same, so don't have to worry. Okay, so who's really winning? The US domestic and manufacturing and energy, steel, aluminum, copper, aerospace, semiconductors, and pharmaceuticals are among the primary beneficiaries of the renewed Section 232 and IEEPA power tariffs, pushing domestic reshoring and favorable margins. So the US energy firms like Chevron or ExxonMobil benefit from surging EU demand for LNG and oil infrastructures under the EU-US trade framework. So China plus one destinations like Vietnam, India, Malaysia, Taiwan, Brazil, Mexico, among others, are gaining export market shares as US-China trades slow, especially in electronics, autos, semiconductors, and agriculture. Taiwan has expanded manufacturing capacity. So companies like Quanta, Circom, Windstrom, and created over 21,000 jobs, capitalizing on diverting tech manufacturing hatches. Align partners who negotiate lower exposure, so countries that also kind of like benefited are like the EU, UK, Japan, secured tariff carved outs limiting the damage. Their exports still face increased rates but lower than others. So the EU automobiles are at 15% tariffs at this current point of time. So I mean, okay, no matter what happens, right, in trading and investment or in the world, you think about it, if someone loses, someone has to win. So there's always going to be people winning and there's always going to be people losing in the market. So as you can see, even though like the tariffs are affecting, which we will be touching on in a while, will be affecting a few people, it will also still be benefiting others. Okay, like different sectors rather. It's not a group of people, it's more like sectors. Okay, so who is losing like pain across the industries and economies? Small businesses and import vulnerable companies. Okay, these people are definitely really affected by the tariff. Craft producers like Genova Pipe and Microskids LLC, reliant on imported components, face abrupt pricing hikes or risk closure due to import cost uncertainty. Okay, another company called Fish USA, a small sporting goods importer, paused key orders due to unpredictable duties and worried margins. Okay, trade dependent countries and exporters are also affected. So large exporters such as Canada, especially in like steel, autos, and lumber, Switzerland and Brazil face up to 50% tariffs, harming competitiveness and threatening exports that fuel domestic growth. Nations with limited market clout, like Laos, Algeria, are hit hardest, lacking negotiating powers and facing full brunt of high US duties. Okay, the other people who are also affected are the US consumers and global supply chains. So rising tariffs translate into higher consumer prices. The estimates show that US households could see an increase of roughly $2,400 annually in import-related costs. And the major retail and manufacturing firms are grappling with supply chain disruption, product repricing, and the murky exemptions rules, causing widespread business uncertainty. Okay, so there are also worries as in strategic implications and future trends. So relative winners and temporary shelters. So even countries with negotiated lower rates carry elevated tariff burden compared to the pre-2025 norms, making everyone a potential loser long term. Okay, although there's going to be some winners, but like long term, it's going to make a lot of people losers. Okay, so investment outlook in this is that a lot of analysts do warn that trade wars create no true winners. The US, while aiming to protect domestic producers, also endangers economic stability and global investor confidence. Okay, so the solution to that is just global realignment. The tariff regime has prompted regional trade configuration, supply chain shifting to ASEAN, Okay, I think the audio should be working for everyone. Yeah. Okay, so ASEAN as in like Singapore, Malaysia, Brunei, Philippines, that little part of that world. Yeah. Okay, cool. Okay, so it's moving supply chains to ASEAN, India, Latin America, countries forming trade blocs to offset US pressure. Okay, yeah, that's right. Okay, so to summarize, the winners are basically US domestic sectors like energy and manufacturing, and China plus one economies gaining exports reallocation. And the losers are the trade-dependent countries and exporters like Canada, Switzerland, small nations, small import-reliant businesses, and US consumers absorbing higher prices. Okay? Around good for now. I know today's webinar is very like a lot of information, right? It's very like wordy, a lot of like, but it's good to know. It's good to know. You just need to know how it helps you. Okay, so trading opportunity, short tariff exposed retailers, domestic long domestic manufacturers. So, okay, retailers are under pressure. The average US import tariff is now 18.3%, the highest since the 1930s, rising from 2.2% at the start of 2025, impacting goods like apparel, toys, books, electronics, especially at the discount chain and dollar stores, for example. Okay, companies such as Deckers, Outdoors, Caters, Mattel, Hasbro, I mean, we've all heard of these companies. Mattel and Hasbro are like toy companies. Okay, Mattel does like Barbie, Ken dolls, and Hasbro does like Monopoly, right? And Berkshire Hathaway brands like Fruit of the Loom and Jazzwares are raising prices or facing volume drops due to inflated import costs and disrupted supply chain. Okay, so a short idea is that the retailers heavily reliant on Chinese imports or low margin products. Okay, example, discount chains and imported toys and apparel. Okay, early warnings, guidance cuts citing cost pressure. So how does this affect long domestic manufacturers? Tariff regimes shields steels, auto, semiconductors, batteries, pharmaceuticals, aerospace from foreign competition. These sectors are flagged as critical to national security. So JP Morgan and other analysts highlight reshoring trends, increased investment in the US, manufacturing boosted by tariffs and tax credits. So small and mid-sized US manufacturers like Energizer are gaining through inflation relief via IRA credits and tariff protection. Energizer's stock jumped 26.7% after confirming ability to offset tariffs impact. Okay, and the long US-based manufacturing stocks like companies in steel, like US Steel, aerospace like Boeing, and semiconductors and basic materials. Okay, these are also affected. These are usually going on the upside. Okay, anyways, the government usually protect them anyways. Okay, so strategy framework and risk consideration is that tariffs are mostly fixed per USTR year, no near term relief likely. So trade signals should align with macro announcements on earning cycles. Okay, so you need to watch for legal uncertainty. So court reviews cases like VOS election, threatening tariffs legality outcomes could affect trade flows if injunctions occur. I mean, that's not going to happen anytime soon. But if it does occur, you just need to take note. Okay, the macro views on this that consumer resilience may curb retail pressure. Rising inflation threatens case for gold and industrial equities. This is what I'm talking about. So short retailers, the target assets are retail stocks and entry signals is that the earning miss and margin pressures. The risk is that the price pass-through may delay impact. Long manufacturers, if you're looking at long manufacturers like industrial or manufacturing equities, target industrial and manufacturing equities. So the entry signals will be restoring announcements, earning bids. The risk for that is that rising input tariffs output gains. Okay, the next will be sector ETFs. So XLI, ITA, GLD. Entry signals will be macro news, Fed signals, tariff updates, and risk will be the broad market swings. The last one will be option plays. You can put spreads and call spreads. I mean, these are for option traders. I just put this here as reference. And your entry signals will be technical analysis and volatility spikes. Risk will be time decay and assignment risk. Okay, this is for people who are considering to do like different forms of investment. Okay, cool. Why are traditional safe havens like the US dollars and the treasuries falling while gold continues soaring? Okay, let's talk about this. So the US dollars index fell around 10% in H1, okay, the first half of the year, making the worst start since the early 1970s. This decline is tied to rising trade tensions, recession fear, and fiscal instability triggered by aggressive trade policies and concerns over Fed independence. Okay, there are a lot of analysts out there who have warned that while the dollar remains the world's top reserve currency, its exorbitant privilege is under strain. So investor confidence is deteriorating due to policy unpredictability and structural debt issues. Okay, another reason is that there is a declining reserve confidence. Okay, institutional sentiment is pessimistic. A recent survey shows that over 60% of fund managers viewed the dollar as overvalued and expected further depreciation. Okay, do you guys agree? Can you guys let me know in the chat box if any of you are holding US dollars, if any of you are American actually, and your main currency is US dollars? I do want to know. Yes, no, yes. Okay, I've got answers coming in. Okay, cool. So I personally do a lot of like US related investment. So I do a lot of like uh cryptocurrency, but then I put it in USDT later on when I'm just holding it in my wallet or my funds. Okay, and I also do a lot of like index. So like S&P, NASDAQ. When I say I do S&P and NASDAQ, I don't mean like I trade it. I mean that I invest in S&P and NASDAQ. That means that I put funds in S&P and NASDAQ and I don't take them out. Like I do passive investing on S&P and NASDAQ. So I am quite US heavy, US dollars heavy. So it is kind of scary for me to see the US dollar keep dropping. But I do agree on what majority of analysts are saying. They're saying that the US dollar is very overvalued and that right now it's just going to fair value, the fair valuation, which I can kind of understand because during COVID they did print a lot of money. And yeah. Okay, so back to the topic. So treasury yields, um why is it also dropping? So yield collapse versus debt uncertainty. So treasury yields plunged in early August, especially on short-term notes, as weak jobs data and fears about Trump's firing at the BLS and Fed raised skepticism about economic transparency and policy direction. We now face a paradox. So the longer-term yields are rising due to fiscal concerns, especially over massive budgets and deficits, making treasuries less effective as a safe haven. Okay? These are what analysts are saying. Okay, so the conventional negative correlation between treasury yields and gold has decoupled. Gold had soared even as yields fluctuated and sometimes rose. This signals deeper structural mistrust in bond market stability. Okay, so the S&P Global notes that gold has rebounded more than 9% in early April amid turbulence in the treasury market, while dollar and bond confidence eroded. So why exactly is gold gaining and higher than ever? So I'm sure all of you do understand that gold is a safe haven asset. Usually when there's uncertainty, there's a lot of fear going on, people tend to park their money in gold, whether it is like buying the gold bar itself or just like keeping their money in like gold assets. Okay, people tend to just run to gold because it's known to be safe haven asset. Okay, so goals 2025 search drivers. It soared 26% in US dollar terms in H1 of 2025. So powered by a weak dollar, tempered treasury yield movement, and soaring geopolitical and policy risks. Central banks and investors are buying heavily. Investment demand rose okay, 78% year on year, and central bank purchases remain elevated. So 31% above pre-2022 norms. Okay, so the safe haven has been reimagined. Despite rising nominal yields at times, the real yields, inflation adjusted obviously, okay, remains low or negative, boosting gold's appeal as a non-yielding asset. Okay, so Citi forecast that gold could reach 3,005 to 3,006 per ounce this quarter. JP Morgan is another one, a very popular analyst, sees potential for 4,000 by mid 2026 if uncertainty persists. Okay, I did do my own analysis on XAUUSD and like gold in general. I do believe that gold is going up. Okay, I have an analysis on it. If we are done with these slides and I still have time, so I only have a few more slides left, I will still have time to go on the charts. If we still have time, we can go on the charts and I can show you guys my analysis on gold. I do agree that gold is going up. I agree with the analysts. My own technical analysis is showing that as well. Okay, so strategic takeaways is that the USD weakness now reflects policy unpredictability, not traditional risk of buying. Treasuries are judged dangerous due to fiscal imbalances and doubts about official data integrity. Gold thrives amid geopolitical uncertainty, central bank buying, and negative real rates. The traditional safe haven correlation is broken. Trust in fiscal and monetary credibility is now key. Okay, so if the people don't trust you, you are just setting yourself up for failure. So currency plays are the Japanese yen and the Swiss franc, now the new safe haven currency. What do you guys think? I actually think they were always the safe haven currency, right? I already thought they was a safe haven currency. It's just that recently with what's happening, it just made it even like a more safe haven currency. Oh, by the way, guys, I am in Singapore, right? I've been like reading up a bit, and it's saying that even the Singapore dollars has recently been showing a lot of like safe haven currency components. Okay. So it's not really a safe haven yet, but yeah, it might eventually. Okay, so investors are retreating from the dollar despite risk of environment. The reason? Widespread distrust in the US fiscal management, data integrity, and central bank independence amid aggressive, sorry. Okay, oh, sorry guys. We're gonna go through these one in a while, but let me explain what these are, okay? Okay, so the aggressive tariff rollout caused the dollar to depreciate sharply, driven by economies rebalancing away from US equities rather than driving demand for US dollars and as expected. So the Japanese yen reclaiming safe haven currency status. Okay, the risk of appetite amid tariff escalations encourages flight to yen due to Japan's massive capital markets and perceived low risk liquidity. So since mid-January this year, the Japanese yen has gained over 9.5% versus the US dollars. Okay, its strongest year-to-date rise since 2020, outperforming all G4 currencies. Okay, outperforming all G4 currencies. The Bank of Japan's cautious part is that holding rates steady but leaning towards hiking later in 2025 adds interest rate supports to the yen. So the risk on contrary forces is that crude oil spikes, geopolitical shocks weighs heavily on Japan's trade balance, pressuring the yen, the Japanese dollar, just Japanese yen, and it fell 2.4% from mid-June in such conditions. So tariffs on Japanese export, Trump announced a 25% levy on autos and electronics effective from August the 1st, so it's already in effect, may undermine trade flows and yen strength. Okay, moving on to the Swiss franc. Moving on to the Swiss franc, it is steadily appreciating. Okay, the cross strength is that the CHF is 7% year to date into 7% positive year to date in 2025 as risk adverse capital flocked to it, reinforcing its traditional safe haven reputation. Switzerland's political neutrality, strong financial system, and debt stability underpin the Swiss franc's demand during a global trade turmoil. So tariff and policy pressure, Trump slapped a shocking 39% tariff on Swiss goods effective on the 7th of August, which is basically in 2 days, targeting industries like watches, machineries, and chocolate. Okay, but pharmaceuticals and gold exports are exempted. Swiss stocks and SMI dipped on the news, while CHF initially weakened 0.4% against the US dollar, but regained strength as flight to safety flows dominated. So the Swiss National Bank and SNB has held rates at 0% to fight deflation, signaling potential cuts later in 2025, but markets confidence continues driving CHF flows despite low rates. What are the trading insights and the strategies? So the trading ideas is to long, okay, long the Japanese yen against the US dollars, or I mean you can consider the Japanese yen against the Australian dollars in risk-off zones, especially after tariff headlines or weak US data. So another option is to long the Swiss franc against the US dollar, or you can consider CHF EUR and CHF GBP as global risk rises, leveraging Swiss neutrality appeal. Okay, so this is basically a summary of everything I just said. Yeah, I'm done. Okay, so guys, I'm done with whatever is happening with the tariff. Just to like long story short, the tariffs, in my opinion and in many analysts' opinion, is going to affect the whole world and it's basically out to get everyone. And at the end of the day, everyone just might be a loser in this trade war. Okay, it's aimed to, the whole reason that Trump came up with all these tariffs is aimed to protect the US citizens, okay? But at the same time, it's also hurting them. It's hurting small businesses, it's hurting retailers, it's hurting the consumers, it's hurting a lot of people. So I don't see how anything good's gonna happen to it. As of now, things are still unfolding. As you can see, like certain tariffs are still being unfolded. Like for example, for Switzerland, it's going to take effect in 2 days, or like the Japanese in Japan, it only started on the 1st of August. So as of right now, we don't really know the full update, but as we keep waiting for the next few days or the few weeks or months, we will be able to see the full impact of tariffs. Right now, it's just still unfolding. It's still unfolding. We don't know yet until things are in effect. In terms of China, the people who actually the only people who are like benefiting from this is like it's so little compared to who is losing. Like China, for example, has done redistribution. So China basically said, yeah, I don't need you, China. I'm gonna go distribute to the rest of the world. So China seems to be okay, but I think at the end of the day, everyone will still be hurt from this tariff thing. Okay, cool. Give me a moment. I'm going to pull out the charts. I did say that if we finish early, that I'm gonna go into trading view and then we can look at gold. Give me a moment, guys. Okay, this is my analysis on gold. I'm gonna like redo it so that it makes sense. I personally think that gold is on an uptrend. Okay, I personally think that gold is going to go up. There's too many uncertainties. Like if I'm just talking about like fundamentally, it makes sense for gold to go up. If I'm talking about technical analysis, it also makes sense for gold to go up. Okay, so how I'm analyzing gold is by using Elliott wave. Okay, basically, I think that we are on a wave four for gold. I'm specifically XAU-USD, okay? Specifically XAU-USD. Okay, so wave four for gold, for those who don't know what I'm talking about, basically, when it comes to Elliott wave, it's a 5 waves movement. So it's 1, 2, 3, 4, then 5, right? I basically think that we are now at a 4, okay? Usually a 4 moves sideways, by the way. It doesn't usually do that movement. It usually moves like this. Okay, yeah, 2 is correct. 2 like goes deeper, and then 4 usually goes like sideways. Okay, so I currently think that we are now at a 4. As you can see, 4 is a pullback wave. So 2 and 4 are pullback waves. So price is going in this direction. It's going to pull back, continue in that direction, pull back, and then continue in that direction. So we are currently at a 4. I mean, this is just based on my own analysis. By the way, guys, I can be wrong. Okay, I can be wrong. So please don't like just take whatever I say as educational. Okay. So the wave 4 comes in many different patterns. It can do a ABC, ABCDE, and a WXY. I currently think that we are in a WX, and then right now we're gonna complete the Y. I don't know where it's gonna end, but I'm thinking somewhere there. Okay, how do I know why do I think it's a WXY? It's because, so WXY within W, there's gonna be a ABC. A, B, and then C. And then it's doing a flat pattern. So when I say a flat pattern, you can see that B and the starting point is about the same height. So if we don't take this wick into consideration, we're just taking the body, you can see that this high and this high is basically the same height. Okay, not taking the wick into consideration, obviously. Okay, so this is called a flat pattern, FLAT pattern. I'm thinking I see a flat pattern. I could be wrong, but I mean, I referenced a lot and I think it should be a flat pattern. So right after ABC, you're gonna get an A, B, and then another ABC. So it's gonna be flat, 3 moves, which is an ABC, followed by an ABCDE. So an ABCDE usually moves in a triangle. Okay, so I'm gonna draw that triangle that I'm talking about. Okay, then this is going to form a triangle. And once this triangle is formed, it's going to break up on the upside. Okay, that's what I think is going to happen. Again, don't quote me, I could be wrong. Okay, so again, this is what WXY looks like. WX and then Y. There are different variations of WXY, but I just think that this is the correct variation. Within WXY, you've got A, B, C, A, B, C, and then you've got one, A, B, C, D, E, and then right after that A, B, C, D, E happens. Sorry, I should be moving this a bit higher for it to make sense. Okay, that ABC happens. Usually what happens is a 1, 2, 3, 4, 5. Okay, a 1, 2, 3, 4, 5. Okay, this is what usually happens after a WXY. Okay, so an ABC will look something like this. A, B, C, then D, and then we're talking about E. Right after E, then we are going to start with 1, 2. Oh, okay, let me see if I can just finish this and not have to pull out my charger. Yeah, I think I should be good. Okay, 3, 4, and 5. Yeah, the webinar's going to just stop itself in like 5 minutes, so I think I should be good. Okay, so right now my analysis for gold will align closely with what analysts are saying. Analysts are saying that they think gold is going to go up. Okay, we've got like JP Morgan even thinking it's going to go to like 4,000. Okay, I don't have 4,000 in mind. I don't know what the exact number is, but it is so possible that it can go to 4,000. Okay, so yeah, I basically just want gold to move within this triangle and eventually break this triangle and then continue moving in the upside. So my analysis for XAU USD is the same as what analysts are saying. We're just waiting for that upwards move to happen. I'm thinking if it reaches the end of this triangle, right? Because I don't know when it's going to break this triangle. It could break now, it could break later, it could break next month, it could break many months from now. Okay, I don't know. We cannot really predict. I mean, the latest that it will break, it will be November because that will be the end of the triangle. Okay, so let's say it does this, and then this, and then we start with this. So we're looking at gold to start its upwards movement somewhere in maybe October, maybe earlier or maybe later, but I'm just guessing, I'm just forecasting it'll be somewhere in October. Okay, I'm just guessing it'll be somewhere in October. Okay, so this is my analysis for XAU USD. Let me just remove that again. I just did that analysis in 5 minutes. Okay, let's just use JP Morgan's target as our aim. Okay, it's not the correct target, but I'm just randomly using one target. Okay, so it should look something like this. Not necessarily, but it should look something like this. Okay, if this plays out, then like I do agree that it will go up to where I need to redo the analysis when the breakout happens. I cannot really tell you right now. Okay, cool. Do you guys have any questions? Because I only have like 2 more minutes with you guys, and then this webinar will end. Do you use any other form of technical analysis to analyze your charts? Okay, yes. Other than using Elliott wave, I like to use the Elliott wave because with Elliott wave, you kind of can predict. With Elliott wave, you can kind of like forecast to really far based on the principles and all the guides of Elliott wave. But to answer you correctly, I do, even if I'm not using Elliott wave, right? Let's say I delete all of this. Okay, let's say I delete all this and I just zoom out on the charts. I mean, we're just looking at the charts. Obviously, gold is moving up, right? It's obviously moving up. So sorry. I'm just randomly drawing an uptrend. Okay, so I am a trend trader. I am not someone who like I buy now and then I sell now. The only time I buy or sell is when trend is telling me. So obviously when we're looking at daily, it's so obvious it's on an uptrend. And we got onto the small time frame. It's so obvious it's on an okay, not the small time frame, the bigger time frame. It's so obvious it's also on an uptrend because gold has been moving up for the longest time, right? Because it's a safe haven metal. So even if I'm not using Elliott wave, just by looking at trend alone, I am still biased that gold is going up, and then I am still going to look for the pullback. So my aim as a trader is number one, to decide where price is moving and then make a decision based on that. So if I think price is going up, I'm obviously going to look for a buy entry. So now that I know that I want to look for a buy entry, the question is where do I get in for a buy? So using Elliott wave, I already decided I'm going to get in for the buy when price breaks the triangle. Right? When price breaks the triangle, that's when I'm going to decide to get in for a buy. But at this current point in time, if I'm using different forms of technical analysis, I'm going to try to get on a buy based on like support and resistance, based on like trend line breakout, based on like all those other stuff. You can as well if you want to. You don't exactly need to use Elliott wave. Okay, you can even use the indicators, you can use price action, you can use whatever, news trading, whatever works for you. But personally, I use the Elliott wave to trade, and it has been working out for me. In terms of gold. Oh, this is my trade on URUSD. Seems like it's going well. Seems like it's going well. Not 100%. Okay, anyways, guys, the webinar is gonna cut off soon. So I'm just gonna end this here. Take care, guys. Happy trading. I hope you guys learned something today. And I hope you guys make lots of profits from trading. Okay, take care. Bye.